What's going on, guys? My name is Matt, and my company is called the DeRosa Group, and we're a real estate company dedicated to transforming lives through real estate. One way that we do that is giving away all kinds of free education on this YouTube channel. And there's all kinds of free videos you guys can watch of us touring our properties that we own, apartment buildings, and all kinds of cool stuff like that. And also people emailing in questions too. Help me at DeRosaGroup.com. That is help me at DeRosaGroup.com. And I will answer those questions right here on this YouTube channel for you and everyone else to learn from. Today's question came from Fred. Hi, Fred. And apparently Fred's pointing out that he and I had lunch like 10 years ago, and life happens and twists and turns of life, and Fred's really looking to get serious on his real estate business from that conversation that we had a while ago. So hey, happy to help you if I can, Fred. Fred has this is the perpetual real estate investor question on getting into real estate when you don't have a whole lot of money, or AKA getting a rental property for cheap. Okay, let's break that down. Okay, there is getting a good deal on a rental property, but that could mean getting a rental property that should sell for $1 million, that's valued at $1 million, and getting it for $850,000. Well, that's a good deal, Well, what if you don't have 850 grand? Or what if you don't have the money that you would need minus the bank loan to buy that property? So getting a good deal on real estate can be done. And for those of you guys that are watching this video to learn how to get a good deal on real estate, we have to get that 2 different ways you're gonna get a good deal. Network with brokers and make sure that you are their first phone call when they have a good deal, and the way you get that first phone call is you either do a lot of deals with them, or you position yourself as someone who's going to give them a no hassle, very quick, no questions asked. I'll take it as is. Just give me the deal and I'll close. No funny business, no like backdoor wholesale. No, you're going to put it under contract and then try and wholesale your contract or whatever. Just be honest with the broker and what you're going to do. And they may take you seriously and send you a really good deal, like a distressed owner or something like that when it comes when it comes all across their plate. And it does. They don't have time to market those things. So good deals do come to brokers, but they're going to give it to either their inner circle or someone that they know that's not going to mess around with it, that can close really fast. The other way you can get good deals for yourself is by doing direct marketing, doing distressed owner searches, public record. There's a ton of information out there, including on this channel, including everything from probate or buying from someone that's in general in distress, that's not looking to get the best number for their property. They just need to get out. Need a number that works to pay off their debt and to get out from under the property. So those are 2 ways to get good deals, but that's not what Fred's talking about. But I wanted to address that for you guys who are watching this video, thinking that buying a rental property cheap is the same as getting a good deal. It's not the same as getting a good deal. And if you have the means, then you can use other resources to get good deals. But if you want to get a rental property cheap, let's talk about that, because I was a former Trenton landlord. We don't have very much in Trenton, New Jersey anymore, but we got started in Trenton because Trenton at the time was a cheap market. And there's nothing wrong with Trenton. It's a good market to invest in, but you shouldn't invest in a market just because of the price point. There's phenomenal properties that are in really, really bad neighborhoods that you could buy for $15,000, $20,000 a unit, that are maybe in crime-ridden areas or areas where just no one else wants them. And that's how you get a rental property cheap, is you buy a property that absolutely no one else wants and everyone's picked over it, and there are no buyers out there. And so the seller can't ask any money for the property. So they're going to sell it for cheap, right? So be careful about when you say buying a property cheap, because that could mean buying a property either that the rents are so low that they don't match with the purchase price, like the 1% rule or whatever it is, isn't going to work, or that you're going to buy in such an undesirable area that no one's going to want. And so it's maybe a crime-ridden property itself, or it's surrounded by crime, or it's just out in the middle of nowhere, surrounded by no development, no economic growth, and no tenant would ever want to live there, right? So be careful if you see a low price. And you might find the diamond in the rough that way, but if something's super, super low price to begin with, if it's cheap already, like, the whole market's at 100,000 a unit, and you find something at 20,000 a unit, you may be getting lucky, or you might just be discovering something that everybody else has already looked at and said, no, I don't want that. And so the price has to come down. So that's first caution on buying properties cheap. Now, you can buy or underpriced property in a market that's on the upswing, like Trenton did. When we first started buying in Trenton was selling for 20 to 30 to 40,000 a unit, somewhere in there. Trenton's not selling for a good bit more than that. So we happened to catch it down here and caught it up here. So the better way to look at this, guys, is how can I either put a reasonable amount of money to work, what I have to buy a $40,000 property, you can buy those. But it's got to be in a market that's got good economic fundamentals, and the winds of change are coming through that market. And maybe that property might not be $40,000 a couple of years from now, because the worst thing you can do is go buying a property for 40K that's going to give you maybe issues, because other people maybe don't want to pay that, didn't want that property. And so you're going to maybe have some geographic issues, or crime issues, or lots and lots of work that needs to be done to the property, whatever it is. Maybe you have to deal with that. And if the market's not on the uptick, it's going to be tough for you to unload it at some point in the future. So another way you guys can put money to work in a deal. Let's address the core question here is, I don't have a whole lot of money. It's what my friend Fred here really is saying. He didn't say this in the question, but I'll tell you what really is being said here. Maybe you guys watching this video are saying the same thing. I don't have a whole lot of money and I want to invest in real estate, right? Maybe that's what you're really saying. And that's what you're really saying. There's two ways you can go about that too, right? You can use the BRRRR strategy, the buy, renovate, rent out, refinance, repeat. I think I got that right. That my buddy David Green wrote. And you could also read my book, Raising Private Capital. It talks about getting money out of your own network. Because if you don't have the money, maybe you know somebody in your Rolodex that has the money. And so you get somebody out of your Rolodex with money, they loan it to you or invest it with you as equity, and you buy a property, the $40,000 property I just talked about that needs lots of work, one of those, and renovate it, bring it up to value, and refinance it to pull that capital back out. And you do it over and 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 over again, right? So that's one way to invest in real estate if you don't have a lot of money, is you build a business around it, which is the BRRRR strategy. But the caution before I transition, caution is if you want to do that over and over and over again, that is work. It's capital W. I'm sorry, it's a 4-letter word, but it is work. And if you're going to do it over and over and over again, it is hard to do if you have a full-time day job, right? If you want to transition to doing real estate full-time, as I did 16 years ago, if you want to transition to that, then it is a good method to do it, especially if you don't have a lot of money. The BRRRR strategy, aside from a house hack, the BRRRR strategy is the way to go if you don't have a whole lot of money to invest in real estate. Now, if you have a day job, but you also don't have a whole lot of money, then the way to go on that is to find ways to micro invest in deals. Do not go buying the $40,000 house just because it's a low price or whatever. You should micro invest with an operator that has an existing business that's functional. You can find them on Bigger Pockets. You can find them organizations like mine. The DeRosa group works with people that way that want to passively invest in things. And you can put less money than you would think to work in deals. Unfortunately, the way the world is right now is to invest in some opportunities, you got to be accredited. I have videos on YouTube about that, what that means. You can look it up on Google, or you can watch my video here. Check in. If my video producer's watching this, please leave a link below. If he doesn't do it, leave a comment about looking for our accreditation video. You can watch that. It tells you what it is to be accredited. If you are accredited, there are a ton of resources out there for you to invest, as little as in the low hundreds or even $1,000 or $2,000 into real estate. And there's coming more and more crowdfunding portals online that you can look into that are allowing non-accrediteds to invest in deals too. So I would consider, if you've got a little bit of money to invest, you've got a job, to bottom line it, invest with someone who has a business that can put a little bit of money to work for you. I can promise you the juice is not going to be worth the squeeze. The time that you're going to have to put in, even if you put like $10,000 to work into a property, let's say, and you make a great return, 20% annually, that's $2,000 a year. That's awesome. That's not worth the time that you're going to have to put in if you have a full-time day job to manifest that money out. You're much better to put it to work in somebody else's business, even if they can get you 15% on the money, and recycle that cash flow over and over again, and then rinse and repeat and do it again and again and again and again. Unless you want to quit your job someday and do it full-time, investing with another operator is the way to go. I know I wanted to talk to you. I think I've covered all the ways you can invest a little bit of money in real estate, AKA getting rental properties cheap, which is what we're talking about here. But I wanted to address the core issue underneath. Thank you, Fred. Let's have lunch again. It's been too long. It's been 2 years, 10 years, according to your email here. So it's been too long, my friend. So email me again, and let's do lunch again. Hope you're well, Fred. If you guys have questions, help me at DeRosaGroup.com. Help me at DeRosaGroup.com. I'll answer your question right here for you and everyone else to learn from. Make sure you check out our insiders community on Facebook. Look up DeRosa Insiders. It is a free community you guys can join that talks all kinds of real estate shop, how to go live, and you can pick my brain and all of that fun stuff. That's what I got for you guys. Thank you for watching. Have a great, profitable week. Only got time for one today, Jordan. Oh, let me do an intro because I like doing the intro before the video, hey, my name is Matt, whatever. Okay. I think we wanted to call it buying rental property cheap. Hey guys, today we're going to talk about buying rental properties cheap, aka very little, if any, of your own money. Check it out. All right, let's go. Bye, Jordan.